Are we on the verge of a financial upheaval of historic proportions?
In this video, we bring together insights from financial experts like Andy Schectman and E.B. Tucker to break down current market trends.
And here's the best part. You'll get all the vital information distilled into just minutes.
Exactly. Discover how the BRICS nations might challenge dollar domination and what this means for your investments.
Welcome to Financial Insights in Minutes, where we simplify complex financial narratives.
Stick around to learn why many in America are facing economic hardship and what you can do about it.
But first, we dive into Andy Schectman's pivotal insights on a new world monetary system. Let's explore some important insights from a recent video on rising interest rates. It's a hot topic that's influencing investor sentiment.
Right? As the 10-year yield spikes from 3.6% to 4% in just a month, it's crucial to keep an eye on how this affects the market.
What's the core thesis of the analyst in the video?
The core argument suggests that while the interest rate hike might seem small, it could signal a significant upward trend, echoing the troubles of the 1970s.
That's quite a comparison. What are the key factors that feed into this thesis?
Historical context, especially past market reactions to similar interest rate movements, primarily when inflation surged.
The analyst draws parallels with the 1970s. Why should viewers pay attention to this?
It's a cautionary tale. Rapidly rising rates then led to major market downturns.
And how do current events tie into this?
Geopolitical tensions are causing oil prices to creep up, which could echo past inflationary trends.
So how do inflation rates today stack up against the 1970s?
Today's rates are declining, starkly contrasting with the inflationary spikes of the past.
What have past market behaviors revealed about rising interest rates?
Usually traders react cautiously, fearing downturns when rates soar.
Any predictions for interest rates moving forward?
If geopolitical tensions don't escalate further, we might see rates decreasing slightly, which is encouraging for investors.
What's the forecast for the S&P 500 amidst these rising rates?
The outlook remains positive. The index seems to be recovering from recent fluctuations.
Any insights on future oil prices?
Analysts anticipate fluctuations. Higher oil prices might challenge current stability.
To wrap up, what should viewers keep in mind from this discussion?
Be prepared for volatility. It's essential to gauge how rising rates might affect your investments.
Absolutely. Staying informed allows better decision-making in shifting markets. In today's segment, we delve into Andy Schectman's analysis on the seismic shifts anticipated in the global monetary system.
Indeed, it's a fascinating conversation, particularly about how the BRICS nations are strategizing to challenge the current dollar dominance.
So what does Andy believe is the core thesis of this discussion?
He argues that the current financial system is on the brink of transformation, with BRICS countries pushing to establish alternatives to the dollar.
That's a bold claim. What signs indicate this shift?
Actions like forming new trade agreements and increasing gold reserves show this momentum.
Andy pointed out that the dollar's weaponization is pushing countries to seek alternatives.
Absolutely, sanctions and economic sanctions are major drivers pushing nations away from the dollar.
What exactly is the new common currency Andy mentions?
It's called the unit, designed to facilitate trade without relying on the dollar.
And why does gold play such a pivotal role?
Gold serves as a tangible asset that can support the value of new currencies, aiding in stability.
What impact would these changes have on inflation?
Inflation could rise significantly as new currencies are introduced and confidence in the dollar wanes.
How are trust issues affecting economic agreements?
Many countries see the West's actions as hypocritical, prompting a move towards BRICS.
Andy predicts the unit could officially launch by 2025.
This could significantly shift global economic dynamics.
What happens to the dollar once this new unit is established?
Andy believes we'll see a significant decline in the dollar's global presence.
To summarize, what's the takeaway for our viewers?
Stay informed and consider how these changes might affect your investments.
It's a critical time in our financial history with much at stake.
Absolutely. Keep an eye on these developments as they unfold.
Today, we're diving into a shocking finding. 80% of Americans are struggling financially. This alarming statistic originates from a Eurodollar University analysis.
It's wild that in an economy often touted as thriving, so many are living paycheck to paycheck.
What's the main takeaway from this video?
The piece emphasizes the disconnect between public perception and financial realities, showing that many are not faring well.
Interesting. What aspects are explored to highlight this disparity?
It discusses factors like rising living costs, stagnant wages, and the overwhelming burden of debt.
Let's break down the wage issue. What's the story there?
Wages have barely budged since the 1970s. Meanwhile, living costs keep soaring.
Debt seems to be at the forefront. What's going on?
Absolutely. Credit card debt is climbing rapidly. Many are using it just to make ends meet.
And as for savings, what do the numbers show?
It's pretty dismal. Less than 30% of Americans have significant saves at all.
The implications of this crisis go beyond finances. How does it affect mental health?
This stress can lead to heightened anxiety levels, creating a vicious cycle.
As we look ahead, what predictions emerge from this scenario?
If trends continue, we can expect widening financial inequality among Americans.
What's on the horizon in terms of financial stability?
If current trends persist, we could see a spike in bankruptcies and a crisis in the housing market.
How will consumer behavior shift going forward?
Consumers might pull back on non-essential spending, focusing more on necessities.
So what's the central takeaway for our viewers?
It's crucial to recognize the widespread financial struggles and advocate for better financial education and support.
Awareness can fuel change. It certainly highlights the need for community support.
Exactly. In these challenging times, supporting one another is more vital than ever.
In today's episode, we're diving into some critical insights from FX Evolution's latest video about potential market pullbacks. With Mark Newton forecasting a 5 to 7% pullback, let's unpack what this means for investors. The central thesis presented suggests we might be on the brink of a significant correction in the markets.
Exactly. According to Mark Newton, recent sentiment surveys illustrate increasing bearish sentiments that could foreshadow a pullback.
What exactly does the bullish percent index indicate?
It's a strong indicator for predicting pullbacks. A decline is often a prelude to market corrections.
And what about technical analysis? How's the market looking on that front?
Negative momentum in RSI and MACD are not aligning with rising prices. This disconnect raises red flags.
Now, let's talk about seasonal trends. Why should investors be wary in November?
Historically, this period sees a risk of pullbacks, especially with approaching elections.
What does Chris predict for the S&P 500 in the coming weeks?
He suggests a pullback could hit 5 to 7%, reflecting the broader market sentiment.
So, with all these insights, what should investors take away?
Staying cautious is key. Prepare for volatility and seek out strong sectors for investment.
In this captivating segment, E.B. Tucker shares his unique outlook on what's brewing in the economy, shedding light on themes of panic and resilience.
Indeed, Tucker boldly describes the U.S. as a fully functioning zombie nation. What does he mean by that?
What's the central thesis Tucker is exploring in this dialogue?
Tucker suggests that despite perceptions of stability, consumer spending habits are hiding deeper vulnerabilities that could lead to significant market turmoil.
Interesting. Could you elaborate on what indicators led him to frame this zombie nation observation?
Tucker pointed to stagnant wages, consumer debt, and a reliance on credit as core elements contributing to this unsettling narrative.
Tucker emphasizes that many consumers live beyond their means. What's the deterioration of spending look like?
He illustrates that financing essential purchases like groceries signals significant economic stress.
It seems like panic is a recurring theme in Tucker's analysis. How does it manifest?
Panic manifests through abrupt sell-offs triggered by consumer sentiment shifts, creating a domino effect in the market.
What external factors does Tucker warn could exacerbate current market conditions?
Tucker points to ongoing geopolitical tensions and recent natural disasters as potential triggers for market disruptions.
Looking ahead, what does Tucker predict for gold prices?
He anticipates gold could exceed $3,000 per ounce in 2025, driven by economic uncertainties.
And how should investors approach the market in the coming years?
Tucker advises caution, recommending a shift towards more stable assets in unpredictable times.
To recap, what should viewers take away from Tucker's insights?
Ultimately, Tucker advocates for a cautious approach, emphasizing the need for investors to be prepared for sudden market shifts.
Balancing risk and opportunity appears crucial as we navigate these uncertain waters.
Absolutely. A proactive mindset can position investors favorably in tumultuous times.
As we wrap up, it's clear from these engaging insights that the financial climate is turbulent.
Absolutely. Andy Schectman insights about BRICS pushing against the dollar echo the urgency that E.B. Tucker feels regarding our domestic economy.
And Mark Newton's warnings about market pullbacks give us practical indicators to watch.
Exactly. It's like a chess game where every move counts, whether it's geopolitics or immediate market reactions.
For our viewers, knowing these dynamics is crucial. If you found this analysis helpful, please give us a like and hit subscribe.
Do not miss out on our future videos filled with valuable insights to navigate the economic landscape.
And be sure to check out our other content that provides essential advice and strategies for these uncertain times.